welcome to Markets Tomorrow right here on ET Nine. I'm Tanveer Gill, and it was not a good show, at least at the last tick for the index, because we closed the low point of the session. More importantly, we've adjusted below 8,500, and while the market optically may not seem to have lost a lot, if you look at the 7-day chart, you would see how the market is slowly adjusting lower, how there's risk aversion creeping into the market, essentially wanting to be a bit sideways, so 2.5% down over the last 7 sessions. That just borders on the markets being nervous ahead of the US presidential election results. We'll talk about that and more through the course of the show. But first to the headlines from the markets desk. The markets end lower, tracking global cues. Nifty ends below 8,500, lowest level since 11 July 2016. Expect FMCG, barring FMCG, all the sectoral indices close with losses. The Nifty Small and Mid Cap Index touched the 50-day moving average in trade. In terms of stock-specific action, MCX rallied nearly 10% after our channel reported that SEBI may allow mutual funds to trade in commodities. Sources suggest both MCX and NCDEX are in talks with market regulator, and options trading may start as early as January. Meanwhile, BofA ML upgraded Bharti Infratel, and that brought cheer for the stock for the second day on the trough. Puneet Bharti Mittal's own company actually upgraded the stock to neutral from underweight. Stake sale by parent company seen as long-term positive. Expect pick up in operational momentum FY18 onwards. In the meantime, from the earnings corner, you had Ambuja Cement delivering disappointing Q3 numbers. Profits beat estimates, but largely led by other income. However, sales and margins were well below expectations. Major setback came in for CESE. Analysts understand that state power regulators' ruling could wipe off nearly 150 crores from the bottom line for the company this year. Stock clocked its first fall since August last year after its request for pass-through of costlier coal was turned down. HCC joint venture bagged a contract worth 374 crores from Narmada Valley for lifting the irrigation plan. Management informed the company has bagged orders worth 4,000 to 5,000 crores so far into FY17. And then Mukta Arts gained as the company mulls hiving off the cinema business, which is essentially the exhibition business, to a wholly owned subsidiary on November 10th. Mukta Arts will remain a production company. All real estate will remain with the company, that is. Management says hiving off cinema business gives a lot of flexibility in operations and a lot more transparency. Okay, voices lined up on the show will make sense of the markets as always. Vibhav Kapoor of INFS will talk about his own market opinion and market outlook. Ajay Bagga will do the same, and we will talk to Amar Singh about his opinion on the markets as well. But let's first go across. I believe Ajay Bagga is with us. Ajay, good to have you in the show. Good evening. What's your own sense about the way trade would pan out from here? We're down 2.5% in the last 7 sessions. More to go ahead of election results, you think?
Very, very tough to call that, Tanveer, but what is very clear is that positions will not be taken going into the elections, because if Hillary Clinton wins, you could have a sharp run-up, and a Trump victory could lead to a further fall in the markets. Right now, it's getting too close to call, though the more seasoned election forecasters like Nate Silver's company are calling about 30% chance for Trump and 70% chance for Clinton to win the election. So but markets are very spooked. One very strong indicator is the Mexican ETF, a $1 billion ETF of Mexican stocks, which saw outflows of $94 million just yesterday on Wednesday. So nearly 9.4% AUMs going out in one day from the Mexican equity ETF listed in New York. So clearly the markets are spooked by even a small probability of an unpredictable Trump presidency. Vis-a-vis a continuity candidate like Hillary winning would get a thumbs up from the markets. So that will keep markets sideways at best, or it could go down. If we break through strong technical levels and then the algos take over, you could see markets going down further. We have broken that today when we closed below 8506. That was a very strong level, but we didn't see follow through selling because it happened in the last half an hour. It opened below that and then it again went below that. towards the end of the day. So tomorrow morning will be critical. If we break through that, then market could be headed much lower, maybe 8,200 could be hit by next week.
Right. Amar, do you sense that on the charts as well, nervousness with the downward bias?
Yeah, overall, what we've been seeing is that any pullback rally is being used to book profits, while at the same time the trend definitely is on the downside in the short term. And as Nifty has taken out the psychological level also, the next level to watch out in the short term is 84.20 to 84.50. That's a crucial level of support for Nifty on the downside. And also if you look at the overall global trends with the Asian markets, European or the American markets, even the S&P is trading below its crucial level. The Dow closed below its 18,000 mark. So somewhere or the other there is some nervousness definitely playing on the minds of investors with regard to the US presidential elections. And it's as rightly said, it's too close a call. So that's what is spooking and unnerving the markets. So that is being unfolded in Indian markets as well. So the level to watch out for is definitely 84.20 to 84.50 on the downside. And yes, the short term trend is definitely down.
Right. So if that's the broad opinion fundamentally and technically, what do you make of the rally in metals right now? What do you make of the rally in ferrous, non-ferrous, as also precious metals? There just seems to be a lot of interest in that pocket. I know gold would reflect risk aversion, but do you think that this is just a marked correction and the trade that started rewarding investors from Jan of this year onwards, which is a reversal to the mean, given that the entire commodities basket was oversold last year, Ajay? Or is there more that meets the eye here?
Yeah, a couple of things here, Tanveer. One, as you mentioned, it was very strongly down across last year on the fear of a Chinese hard landing and oversupply. Now that oversupply has reduced considerably with weaker hands going out of the market. Second is just in sheer earnings, the metals are reporting very good numbers, and that will continue for at least the next 2 to 3 quarters. So if there's one sector you would be choosing and you kept your eyes out of the global environment and just looked at earnings, metals would come out smelling of roses. So there is a fundamental gain there. There is a global demand supply which has got a little bit better, and thirdly there is a promise of very strong Chinese stimulus coming through. If you look at the Chinese numbers, Tanveer, 27% year-on-year growth in automobile numbers, nearly 11% in growth in retail numbers, 14% growth in housing numbers. So clearly that is an economy which is continues to really lead the world through. Out of the 3% global growth, overall if you see on average the world is growing at 3%. China is contributing 1.2% to that, and the Chinese economy still remains a big guzzler of these metal, of the entire metal pack. You have seen that impact even in the currency market in the Aussie going stronger. So I would say metals which have surprised us over the last 1 year, I don't think many analysts called it right. They've done very well since January. I think that continues for another 6 to 12 months, and that's a space one can still continue to occupy.
Right. Do you echo the same view technically, Amar, on the charts for some of these commodity companies? Hindalco, Tata Steel, Vedanta have been outperformers this year, best rewarding stocks from the index?
Yeah, overall if you look at the metals pack, be it Hindalco, be it Vedanta, or be it Tata Steel, yes, they have seen a significant rally, but currently we are witnessing some profit booking coming in because the rally had been sharp, and there is some concern going forward. So in the short term we could see some consolidation, and the levels to watch out for in case of Hindalco would be around 165.66. Technically on the upside that could be a level of resistance. If that is breached, then yes, it could head towards 175, 180 levels. Whereas as far as Tata Steel is concerned, currently it's around 403. On the upside, anywhere between 415 to 425 would be a level of profit booking coming into the market. So we could see some consolidation in the metal stocks in the short term.
Okay, gentlemen, stay on with us. We'll head into a break right now. As we do so, here are Prabhav Kapoor's views on the market going forward, accounting for what the US presidential election outcome would mean for market sentiment.
The markets are going through a corrective stage, and we had expected that. And the US elections have, of course, the uncertainty, have added to the uncertainty. So till the results, obviously, I don't think anything great is going to happen. This is the first time you have a possibility of somebody winning whose policies are really relatively unknown and are pretty. They are not the sort of the establishment policies of the Republican Party. So the markets are really nervous about what that is going to mean. He's a Republican and he's a businessman and he's talking of cutting taxes, which could really have a beneficial impact. But apart from economics, there are other issues like, for example, immigration. There are other issues which could have, a very unsettling impact on the global economy. So I think it's the uncertainty of the whole thing which is weighing on the market. If Trump wins, there is going to be a negative reaction all over the world, and that's going to impact the Indian markets. And while it may not be a great crash, but I do think that markets will go down by maybe about 5% everywhere from the current level. So you could be looking at 8100, 8200 levels if Trump were to win. If Clinton were to win, then obviously you'd get a relief rally to 350 points from here, and then probably that would be the end of the impact of the US elections. Global interest rates are beginning to go up, yields are going up in the US, and if Clinton wins, then you can almost be sure that the US Fed is going to increase rates next month.
Okay, welcome back. You're still watching tomorrow's trades right here on ET Now. I just wanted to quickly touch upon the earnings which will come out tomorrow. You have Titan reporting their Q2 numbers. Movira joins us with what to expect.
Well, it's going to be a good quarter for Titan this time around, with the top line growing by 14.5%, seen at 3,040 crore rupees. EBITDA as well higher by a good 38% at 280 crore rupees, which is going to lead to a margin expansion sitting at 9.2%. And lastly, the net profit is expected at 195 crore rupees. Now, a couple of factors really leading to this growth. Firstly, being the low base effects, because remember that in the corresponding quarter, we did not have the Golden Harvest scheme impact, which is present in the current quarter and the quarter gone by. There's also, of course, the higher studded jewelry sales. That is something that's going to, contribute to the top line as well as the margins. Now, remember that the management had also guided, that gold jewelry sales have been a little, subdued. But when it comes to diamond jewelry or studded jewelry, that is really something that has surpassed their own expectations, and of course will contribute significantly to the margin expansion that is expected as well. And always remember, that during quarter two, discounts increase. So, jewelry is something that's going to contribute very well. Watches once again, will be subdued because it is going to be impacted by weakness that we are seeing in Middle East. So expect a, a muted growth over there once again.
Thanks, Mubina, for that. Let's go across to Poonam, because Union Bank also comes up with numbers. Poonam, what is expected?
Well, we do expect the contraction for the profits to continue again during this quarter, but asset quality, probably the stress they may moderate during this quarter. For Union Bank, the profit is likely at 280 crore, which is a contraction of nearly 58%, slightly muted NII growth at just about 8.3%, with a high trading gain supporting the overall operating profits, and hence the operating profit growth is likely.
All right, Poonam, I'll have to interrupt you there. Breaking now is the most important story for our viewers panel. The GST Council has fixed the GST rates at 5%, 12%, 18% and 28%. This is pretty much in line with the story that we were talking about at 1 p.m. It's pretty much in line with expectations. I think what the government was going with was 26% at the higher end of the tax slab. And because of the state's recommendation, the consensus has been drawn in to get the higher end of the tax slab at about 28%. Gaurang Sinha, who's been tracking the story from the word go, joins us for an update. Gaurang, take it.